So welcome to this. This is Euro USD on the daily time frame. This is Euro USD on the daily time frame. As an intraday trader, your duty is to get in and get out of the market. Intraday trades, like I said, you can have a minimum RR, minimum risk to reward. You have a minimum risk to reward ratio, RR ratio. So for me, my minimum is 1:3. Whenever I'm risking $1, I should at least get $3 out of that risk. So I don't tend to stay so long in the market. I try to just frame my trades using the immediate structure. When people tend to mark market structure, they tend to mark it using the overall market structure. In market structure, we have overall structure, we have immediate structure. And as an intraday trader, you want to get out of the market at least within that day or within 2 3 days. You don't need to factor in what happened in 2006 because you want to take a trade in 2026. It's not that necessary for that trade. Okay. So I start my analysis from the daily. This is the daily. I trade using demand and supply zones. So this is my demand zone here, and price is currently reacting from this demand zone. You could see what is my overall bias on EU. My overall bias on EU, if you shrink this market, you see that the market has been what? Bearish from here. But this was 2021. We don't need all of that data. It has been bearish from here, bearish here, all the way. We've been trading inside this leg, this market leg. All this while we've been in this market leg. This is where we've been. This is the range. Everything happening is happening within this range. It has not taken out this low. It has not taken out this high. So we've been in this range. All right. So we've been bearish. We're going to be bearish until this high is taken. All right. So all these things we are going to factor it in as pullback retracement, which brings me into our immediate bias. Our immediate bias for this pair is bullish. Starting from here, we've been bullish up until this point. We've been bullish trying to pick order somewhere at a higher time frame supply level and determine if we're going to continue this bearish trend or we're going to continue on the bullish trend. So I just look at it. So I look at the most recent structure leg. I don't trade so far back. I trade the most recent structure leg from my daily time frame. What I tend to look at is the most recent structure leg and what price is doing in that structure leg. Where is price reacting from? Why is price reacting from that zone? Right now, when you look at this zone, you can see that we have actually been bearish in this internal structure here. We have something like this, something like this. Then we had all of this, something like this, something like this. And then we took this high, which kind of signified we have closed above the last lower high. So this kind of means that we will start looking for buy trades. So we marked out this demand zone, which price is currently reacting from. So price is reacting from this zone. But look at the thing that happened because this is daily. Price came into this demand zone on the daily and then reacted, did a CRT, closed, swept inside, and then what it did is the supply zone it used in making that sell, which is this zone. You're going to expect some form of reaction from that supply zone. So most likely, when price taps into that supply zone, even if it's going to finally break through the supply zone, there will be some form of reaction. So when price was here, the only thing I was looking for was buy. I was looking for buy trades that will take us to this zone or break this zone and take us above. So when price tapped into this zone on 15th, that was Monday, it tapped into the zone and rejected. Even though on Tuesday it still bought, I will be looking for sales on my lower time frame. in this zone, what I'll be looking for is sell. I'll look for sell until this zone is taken out. Why am I looking for sell? I'm predominantly selling right now. Even though it looks like it is bullish, it is selling. Look at this structure from here. Let's look at this structure from here. You can see this structure from here. This zone was swept. That was why it held. It was swept. So all these things could finally be counted in as pullback, and then we are going to continue the sell. We're going to continue the sell, or we're going to break this supply level here, and then we're going to start looking for buys to these other supply levels. So you could see the structure from here. From April, we are in June already. So from April, I'm good with this. April, May, June, 3 months market structure. So we are bearish for the past 3 months. And I'm going to stay with this bearish bias until a daily supply is taken. If this supply is not broken above, I'm still going to be bearish, right? So this is why I'll be looking for bearish trades. So let me make sure this gets to the 4 hours. I want to see it on the 4 hour time frame and see what it looks like. So if you come to the 4 hours time frame, in that zone, which is this zone, this is the daily zone, you will see the 4 hour supply zone. Let me put this on the daily, remove it from the hour. So you could see that it's coincided. All right. So you could see 4 hour, the 4 hour supply is here, valid supply, because all this place price action is efficient. It's only here that we have inefficiency. So price came back to mitigate the supply and it reacted from it. You could actually see that it reacted from it. If you're active in the market, you could catch some sales from here to here. You could actually make some good sales trading just this pullback, this reaction. Okay. So this is the 4 hours. This supply is still holding. This supply is still holding. But for my entry, I take my entry on the 15 minutes, but I refine it and use confirmations on the 3 minutes. Now, if you're to come down lower to, let's say, 15 minutes, let me say 15 minutes here, 15 minutes on the 15 minutes time frame. Let's see what it looks like on the 15 minutes time frame. So on the 15 minutes time frame, this is what we have here. This is that 4 hour zone. Once we got in on this trade here, I will not take a trade until I get some good confirmation. I will not take a trade until I get some good confirmation. What happened here? Dug into the zone, closed above, which is a value sweep, and then started selling. Now you could see if I wanted to take this trade on the 15 minutes, I will wait for this, and I'll wait for, look at what I would have waited for. We had this, dug into the zone, created this low, took liquidity by sweeping up, and then I'll wait for it to close below this low, which it finally did somewhere here. So the next thing I'll be looking for is for price to react from a valid supply here. Now, when you look at all this price action, you see that it is efficient. It is efficient. On the 15 minutes time frame, this price action is efficient. There's no valid supply I would have traded from in this whole price leg. There's no valid supply I would have traded from. So what I will wait for is for price to dig into the zone again and create a valid supply. Remember, we've confirmed bearish on this 4 hour zone. We've confirmed bearish on the 4 hour zone. So I'll be waiting for price to come back and create a valid supply, which it finally did. We've already confirmed it, so we are just looking for a valid zone to take the trade. Where there's no valid zone here. There's no valid zone, so there's nothing you could have done until price got here. What did price do? Price created this zone. You could see that zone inside of the 4 hour supply level. It now gave us this for our 15 minute supply. And you could see when price taps that 15-minute supply, this is straight entry, set limit. I'm using 4 hour and then 15 minutes for the confirmation. But also, this would have been my TP1, this low, because that is equal low liquidity. You can see these two lows, this candle and this candle. That liquidity would have been my take profit one. And this was a very good trade, 1:6. And you could see how price respected it. All right, you could see how price respected it and gave us this good sell, even though it ranged for a while. This trade peaked entry around Wednesday 1:15 a.m. and by 12:30 p.m. we've hit take profit level, which is this one. If you don't know how to set value take profit, I have a small guide on it called CP101. You could send a DM to get yours or click the link in my bio and it will take you to the page where you can get yours. All right. If you have any questions, you can ask. I set my target here using equal low liquidity, equal low liquidity, equal low liquidity. Now I'll tell you why I also got in on this trade that gave 1:5. It's a very simple trade. When price delivered this target, the next thing price did is setting this new low. And this new low took off that equal low liquidity, not just taking it off, it closed with a body below it. You can see it here. It actually closed with a body, and because it closed with a body, we have a new structure break. And once we have a new structure break, we'll start looking for our unmitigated demand supply levels, which in this case is here. All these places, they have efficient price action. There's no inefficiency here. All the price action here is efficient. This supply has been mitigated here. This supply was not mitigated. There's still an imbalance here. So after putting in this low, price came back to mitigate that supply. Immediately mitigated it. It dumped. It gave us another 5R. Remember, this gave us 6R. This gave us 5R. All these things happening on Wednesday. So like I said, Tuesdays, Wednesdays, and Thursdays are the best trading days because price action must have settled as against Mondays and Fridays. Okay, as against Mondays and Fridays. If you're looking for your setups, look for your setups between Tuesdays, Wednesdays, and Thursdays. Trading within these days are high probability setups. So this was how I caught this one. This was the supply level. You could see that unmitigated supply level. Now, what happened in that supply level is that price came back. This small trade inside that is giving you ratio 7, risk to reward 7. I did this on the 15, on the 3, what do you call it? On the 3 minutes time frame. Remember I said I used 3 minutes time frame for my confirmations. I used 3 minutes time frame for my confirmation entry. Let's go back to 15 minutes. If I'm framing a trade, this is a 15 minutes POI. If I want to catch a confirmation entry on the 15 minutes POI, I'm going to use the 3 minutes. Now let me take off this one and leave it on 4 hours because I've already caught the trade on 15 minutes. Now let's imagine I wanted to catch this trade. This is a 15 minutes POI now. Remember we brought it down from the 4 hour to the 15 minutes. Now if I want to get in on this trade using an extra confirmation, I've already confirmed that trade, but if I wanted to confirm it further, I'll go down to the 3 minutes. Let's see what it would have looked like in the 3 minutes. This one, okay. Let's go down to 3 minutes and see what it would have looked like. Now you could see this is the 3 minutes time frame. This is the 3 minutes time frame. So that was the zone. Now what did price do here? What did price do here? Efficient price action all through. Efficient price action. This is the zone. So when price tapped into our 15 minutes POI, there's no inefficiency. It sold without any form of inefficiency. Everywhere is filled, mitigated. It bought again, tapped into that zone, sold, no form of inefficiency. until he now came here and sold with some uh, some obvious inefficiency and imbalance, which is what happened here. This cell here, this zone, you could see where we got our confirmation from. This small zone here. So imagine refining your trade till you cash this. Now you could see that from there it was a direct sell. And imagine getting in on that trade, still targeting your drawn liquidity. Confirmation entry gives you crazy risk to reward. So let's say you get in here, still targeting the same drawn liquidity, but now on the 3 minutes because you did extra confirmation, your stop loss will just be here. Let's even say your stop loss is here. So your stop loss will be here, everything being equal. And what did price do? From 1 is to 5 or 1 is to 6, now you're trading 1 is to 29, still targeting the same equal low liquidity. Okay, now you have a 1 is to 29 trade. You could see how confirmation setups, you could see how they work, right? Now you have 1 is to 29 as against 1 is to 6 if you're trading it. Let me see. If we are trading it from here down to that equal low liquidity, and then our SL will be somewhere around here. We have 1 is to 6.5, which is not bad, but then getting an extra confirmation and going even below. Now we have 1 is to 29, which is crazy. Okay, which is crazy. So this should only appear on the 3 minutes because that was a confirmation trade. This should also only appear on the 3 minutes. So when we, so guys, you can see that this demand and supply trading is, and this was our 15-minute zone. Let's take it back to the 15 minutes. We just needed to see it on the 3 minutes before we take trade. Now you could see how everything aligned and the sell dropped. And then you could see how this one also was aligned and then it dropped. Remember, this zone was also marked out from the 15 minutes. It was not a random zone. This zone was not a random zone. It was marked out from the 15 minutes. It was marked out from the 15 minutes. If you go back to the 15 minutes, you will see the 15 minutes trade, which gives us 1 is to 5, which is not bad. But then the confirmation trade gave us 1:7, which is a lot more better. So confirmation, this trade gave us 1:6. This one gave us 1:5. So both of them almost 1:12. But then for 3 minutes confirmation zones, we could see how crazy your risk reward could be. And all these things happened from Wednesday Asian section down to New York session. So Tuesdays, Wednesdays, and Thursdays are high probability days for good setups using the demand and supply trading model. Okay, using the demand and supply trading model. There are a lot of confluences. You could see how I tailored it down. There are a lot of confluences, but basically this is how it works. Basically, this is how it works. Okay, basically this is how it works. So it's not, trading is not meant to be extremely complicated. Trade simple concepts. Trade simple concept. When you have back tested this thing severally and now you have confidence in it, you can start taking your trades. Even if it is paper trading, you take your trades till you believe them. Your system, then you build an edge around it. It becomes a system for you. And then you trade it. Okay. And believe you me, in the nearest future, it all starts making sense. All right. So this is it. If there's anything you don't understand and you want to ask a question, do not hesitate to send the comments. Drop a comment, send a DM, and I'll do my very best to make sure I respond to it. This is basically the only concept you need that will not stress you, it will not confuse you, and then it prints this setup at least once a week. So there's no week you're not going to catch some trades. and the risk to reward is quite healthy, even coming down from the 4 hours to the 15 minutes. You could just trade 4 hour zones, 15 minutes confirmation. You can do that and you're still good. If you do 15 minute zones, then your confirmation is on 3 minutes. Your confirmations will be on 3 minutes. All right. I'm not telling you what I think, I'm telling you what I've seen play out over and over again, because the only way to understand this market is to be active in the market, to participate in the market, to actually be in the market, go through the market price action, and then see how you can frame your trades by yourself. It's not what somebody framed for you or what somebody helped you to do. Okay, see how you can frame your trades by yourself. Remember, this zone is not a random zone. This reaction we got here was not a random zone. It was a 4 hour supply zone. Came down to the 15 minutes, got the confirmation, and then we sold. This 15 minutes is also not a random zone. I'm showing you the 3 minutes confirmation, how it closely multiplied our risk to reward. I've shown you why I took my target here, double bottom, equal low liquidity. I knew that price had no option than to get to that zone. So that was that for that. And a lot of other confluences. So if you learn these concepts, all these concepts under demand and supply, you're gonna make some crazy amount of money. All right. I wish you good trading ahead. Like I said, if you have questions, don't hesitate to ask. Send a DM, send drop a comment, and I'll try my best to respond to as much as I can. You have a good trading week ahead. Bye for now. Make sure you keep studying, back test your concepts, back test your strategy. This market has the capacity to liberate you, liberate your family, set you up for life. We are all on that journey, and I'll see you on the other side. To take care of yourself. Bye.